Hello students, welcome back. This is Mrs. Mercado speaking. This is a short lecture over chapter 14 dealing with financial statement analysis. This is for my Accounting 2401 Principles of Financial Accounting class spring 2020 semester. Okay, so I'm pretty excited, guys. Why? Because we are in week number 16. What does that mean? That means that this is the last instructional week. Hooray! Okay, so what this means is this is the last week that we're going to be covering an actual chapter. Okay? Next week is finals week, and then we are done with the semester. And I know it's been an awkward semester because of all of these issues we've had with COVID-19, but we've made it through, and we are now in the finish line. Okay? So this is the last chapter we're going to be covering, and actually it's a pretty simple chapter. We're going to be doing a lot of analysis, a lot of ratio analysis, a lot of different forms of analysis of our financial statements, okay? So we can interpret that information and be able to arrive at conclusions, okay? So that is what this chapter deals with a variety of forms of financial statement analysis. Okay, now this week you are going to have, let me see, 1, 2, 3, 4, 5, 6, 7 homework problems on your homework for chapter 14. Now, this is an important chapter. Why? Because 3 of the problems on your final exam are coming from chapter 14. So it's very important that we know how to work out those problems, because you are going to have 3 problems in your final dealing with chapter 14. Okay? So you have 7 problems in your homework. Of course, I'm not going to go through all of them. There are video tutorials within Cengage that will help you complete your homework. But aside from the videos, I've been looking over the chapter, and it provides excellent examples. Even if you didn't have the video tutorials from Cengage, with some students say, man, they go too fast or whatever the case might be, the actual chapter in itself is very well laid out, and it has great examples, all of the formulas that you need, all of the different calculations that need to be done. All we need to do is read the chapter and invest a little bit of time going over those sections that pertain to the specific problem that you're working on, okay? So don't feel discouraged. Now, what I'm going to do is I'm going to cover the 3 problems that you're going to have on your test. Why am I going to do this? So you can be prepared and you can ace that final, okay? So ever since I started creating these videos, after we came back from spring break and we had this issue with COVID-19, I've been doing these short lectures for you guys. And in all of my lectures, I include the problems that are going to be on your final, okay? And I usually, on my lecture, I let you know, hey guys, you're going to see something similar to this on your final, okay? So for a review of your final exam, I would encourage that you look over, once I provide to you the final exam review, you're going to see a list of problems that you're going to be seeing on your final exam. I should be posting this this week. So you'll have that information available with plenty of time so you can prepare. But once you get that final exam review, I would recommend and advise that you go back and that you listen to my lectures on chapters 8, 9, 13, and 14. Okay? If there's any lectures there for any of those chapters, make sure that you listen to them. Because more than likely, I did mention on those chapters which were the problems that you were going to be seeing on your final exam, okay? Let me just check something real quick. Yeah, you should have lectures for all those 4 chapters posted on Blackboard, okay? So, we're going to get started. This is the last lecture. This is the last instructional week. We are in week 16, which runs from May the 4th through May the 10th. Okay, for all of those students that are parents, I know I come from a Mexican, descent. I was actually born in Mexico. I celebrate Mother's Day on May the 10th. So for all of you mothers that celebrate Mother's Day in the United States is being celebrated on the 9th of May, and in Mexico it's the 10th. Okay. So I just want to say to all of those moms, Happy Mother's Day. Okay, so I hope you all have a good time. So let's get started. Okay, so the first problem that you're going to be practicing on your test is exercise 14.2, which deals with vertical analysis of an income statement. Okay? So, it says, the following comparative income statement, and this is in thousands of dollars, for 2 recent fiscal years were adapted from the annual report of Speedway Motorsports Incorporated. Okay? Owner and operator of several major motor speedways, such as the Atlanta, Texas, and Las Vegas motor speedways. Okay? I've never been to a speedway, but it looks pretty fun. Maybe one day I'll go and I'll travel in one of these places and go see one of these races here. So they give you the information. They give you a comparative income statement, which are your revenues and your expenses, okay, for the previous year and the current year. Okay, so you've got all your data here. Okay, now they're asking you to prepare a comparative income statement for these 2 years in a vertical form. Okay, stating each item as a percent of revenues. Okay, so they're telling you, give me a comparative income statement analysis using revenues as your driver. Okay, and then you're going to comment on the significant changes. Okay, well, before we start working on a comparative income statement using the vertical analysis, let's find out what a vertical analysis is. And this is coming straight off of your book. So, a vertical analysis is basically the percentage analysis of the relationship of a specific component in a financial statement to within the statement is called a vertical analysis. Okay? Although vertical analysis is applied to a single statement, it may be applied on the same statement over time. So you can have a vertical analysis from year over year over year, or maybe from month over month over month. So management can see any increases or decreases in percentage form, not necessarily numerical form. Okay. Sometimes a number might not highlight or provide an outlook of what's happening. We need that analysis in a percentage format, and this is what it produces. Okay. This enhances the analysis by showing how the percentages of each item have changed over time. Okay. So, in a vertical analysis of the balance sheet, the percentages are computed as follows. Okay. Each asset item is stated as a percent of total assets, and each liability and stockholders' equity item is stated as a percentage of total liabilities and stockholders' equity. This is as if you were doing a vertical analysis on a balance sheet. You can do a vertical analysis on the balance sheet or the income statement. Okay. Now, in our case, we are doing analysis on an income statement. Okay. So, if you are performing a vertical analysis on an income statement, then you have to state each item as a percent of sales. Okay? So you just need to know, okay, what am I doing my analysis on? Am I doing it on the balance sheet or am I doing it on the income statement? If you're doing it on the balance sheet, then it differs a little bit. You're going to do these 2 items here. Your vertical analysis is going to be computed based on the assets, based on total assets, and liability and stockholders' equity, based on the total liabilities and stockholders' equity. If you're analyzing your income statement, then you're going to state your items as a percent of sales. Okay? And that is what we're going to be using in this problem. Okay? So I've set up the problem here. Okay? All I did is I copied the information from this table over here. Okay? I haven't done anything. All I did is copy and paste my current year right here and my prior year over here. Okay? And I'm doing a vertical analysis. The analysis is going down vertically. Okay? So I'm going to be doing a vertical analysis. That is why they're called differently. Right now, you'll see in a minute, we'll do a horizontal analysis, and the horizontal analysis will go across. Vertical is going down. Okay? So here we have all of the data. Now I set it up in Excel, or I'm doing this in Excel because when you go out there and work, you're going to be using Excel a lot. Okay? So a lot of the times, yes, you're using QuickBooks or whatever the case might be. But you can easily export all that data into an Excel template. You can do calculations. A lot of things are just so much simpler in Excel. Okay? So what I've done here is I just copy this information, like I said, over here, and this information over here. Now we're going to start off with our analysis. Okay? So, how are we going to do our analysis? Your analysis is going to be each of the line items okay, is going to be compared to your, what did it say here? To your percent of sales, okay? So we're going to be doing each of the line items as a percentage of our revenue, okay? So what are we going to do? Well, you're going to get your admissions, and you're going to divide by your total revenue figure, okay? So you're going to divide admissions by your total revenue, and that's going to give you a percentage of 23.7, okay? For the next line item, which is the event-related revenue, you're going to get your event-related revenue, and you're going to divide by your total revenue, okay? You always go back to your total revenue, okay? And I could do this in a second in Excel, but I'm not going to do that. I'm going to run through the calculations for each item. That way you understand what I'm doing, okay? It would be very simple just to scroll down, but I'm going to go through each of the calculations. So all you basically have to do is you get the line item. In this case, we have NASCAR broadcasting revenue divided by total revenue, okay? And last but not least, we have other operating revenue. We're going to get our other operating revenue divided by your total revenue, okay? Once you do that, you sum up your percentages, and those should give you 100%, okay? Which they do. Now we're going to proceed with our expenses and other items, okay? So once again, I am going to get my direct expenses and events, and I am going to divide by my total revenue, okay? I am going to get my NASCAR purse and sanction fees, and I'm going to divide by my total revenue. You always divide by your revenue. Let me highlight that. Okay, that is what you're going to be dividing by all the time. So it's a piece of cake. The calculations are easy. We divide the line item, in this case general and administrative, divided by total revenue, okay? Now we get to total expenses, and why is it cutting up? Let me see. Okay, there we go. So now we have total expenses and other income from continuing operations here. And once again, we're going to get that line item, and we're going to divide by our total revenue. And then we have our income from continuing operations. We're going to get that number. We're going to divide by total revenue. Okay. So these right here give me the 87%. So you can either do the line item, or if you just want to confirm, you can do the sum of these items right here, because these 4 items make up your total expenses and other. Okay. So that's 87%. So remember, we always have to arrive at 100%. So 87% of your expenses are coming from total expenses and other. And then we have 13% coming is the actual income from continuing operations, okay? So we did that for the current year. We're going to do the same thing for the prior year, but now we're going to be using the 506,205 as our driver here for our calculations. So once again, you're going to get your line item, the 130, 239, and you're going to divide by your total revenue, okay? Now, here, you're going to do the same thing. I'm going to show you a trick if you are using Excel for your homework or whatever the case might be. If you just want to do, one calculation and then just run it down. This is a calculation. This is the formula that I've done. What I want to do is I want to anchor my second item, which is your total revenue, which is cell W10 in my case, okay? So I want to anchor that 506,205. That way when I run my calculations, all of my calculations are going to be divided by that number. That number is not going to change. So these numbers are going to change. They're going to go down, but the 506,205 is going to stay the same. So how do I anchor my 506,205? Well, whatever cell that number is in, you're just going to go ahead and you're going to select it, and you're going to press F4, okay? What that does, it puts a dollar sign in front of the letter and a dollar sign in front of the number. You can either enter the dollar signs manually, or you can just press F4 and it'll do it for you, okay? You need to anchor your revenue so you can be able to just run down the formulas, okay? Now that I have done that, I can just drag this little square at the end. Okay, this is kind of like an Excel class. I'm going to just drag that down, and it'll give me all of the different percentages. Okay, so that is an easy way for you to run your formulas. Okay, so what you do is just get the cell. Like in this case, I had a split here, so I couldn't just keep on running them down. I'm just going to go ahead and I'm going to select that cell, and I'm going to divide by my 506. Okay, I want to anchor my W10 because all of my formulas will be dividing by my revenue of $506,205. So I go back to my formula bar up here. I want to anchor it. So to anchor it, I do F4. You see? And it entered the dollar signs in front of it. Once the dollar signs are in place, I just hit enter. I go back to my cell. You pick up this little square at the little box. It'll be like an X. And you bring it down. Okay? And you'll see the formulas automatically populate. This is easy. That way you don't have to be dividing each cell by that number right there. You can just scroll it down. So if you double click on the cell, it'll let you know what we're dividing by. Okay, so we're dividing the 106 by the 506. Okay, we're dividing the 241 by the 506. We're dividing the 18,280 by the 506. Okay, so we've got the numbers down. Okay, that was the easy part. Okay, remember to divide the line item in each of the years by your total revenue for each of the respective years to get your percent calculation right here. Okay, that is requirement A. Prepare a comparative income statement for the 2 years in vertical form. Done. Now, comment on the significant changes. Okay, so let's look at what's going on. Okay, so what happened to my revenue? Well, last year, my prior year, I had $506,205. This year, my revenue decreased to $490,160. Okay. So, we can say here, overall, revenue decreased between the 2 years. Okay. As did the overall mix of revenue resources. Revenue sources. Okay. So if we see here, we went from 130 to 116. We saw a drop in admissions. We saw a drop in event-related revenue. Okay. We saw an increase in NASCAR. And we saw an increase in other operating revenue. So my two main items here, admissions and event-related revenue, saw a decrease from last year to this year. So we can just say the overall revenue decreased because we went from 506 to 490. So if you all want to be more specific, you can just say total revenue, 506,205 minus 490, 160, 16,045. Let me write that down. Let me get another pen because this one's out of the ink. Okay, so we've got $16,045. Okay, so what I can say here, overall revenue decreased by $16,045 between the 2 years, as did the overall mix of revenue sources. Okay, so let's look at the NASCAR broadcasting revenue. That one increased from 36.6% to 39.3%. So how much is that? So my NASCAR broadcasting revenue increased 39.3 minus 39.3 minus 36.6. It increased by 2.7%. Okay. Did I do the math right? Let me see. 39.3 minus 36.6. Yeah. 2.7%. Okay? So we can say the NASCAR broadcasting revenue decreased by 2.7%, okay, of total revenue, while admissions revenue decreased by 2%. Okay? So if we look here, we went from 25.7 to 23.7. That's a 2% change, a decrease of 2%. From 25.7 to 23.7, that's a 2% decrease. Okay, and total revenue. Revenue. Oh Lord, here we go. Okay. So let's look at our expense categories. Okay. One of the major expenses, which is the NASCAR purse and sanction fee. Okay. That one right there. It increased by, let's see how much. Let's get our calculators. So that one went from 23.7 to 25.1. It increased by 1.4%. Okay? So, my expenses went up for the NASCAR purse and sanction fees from 120 to 122. Okay? So, I can say one of the major expense categories, which is the NASCAR purse and sanction fees, increased by 1.4% of total revenue. Okay. Let's look at direct expenses. Direct expenses and events. It was from it represented 20.7% of my total revenue, while here it's 21% of my total revenue. So that's pretty steady. Okay. So we can say that the direct expenses of events and my other direct expenses, 3.9 versus 4%. Remained fairly constant. Remained relatively constant during the 2-year period. Okay. Now, what happened to general and administrative expenses here? So general and administrative expenses went from 47%, 47.7 to 37.4%. So we saw a significant decrease in general and administrative expenses. Okay? So we can say here, general and administrative expenses, however, decreased significantly. How much did they decrease by? Let's figure that out. So that was what, 10%? No, let me see. That's 47.7% minus 37.4, 10.3%. Okay. We had a decrease in expenses for general and administrative of 10.3% of total revenue. Okay. Okay. This particular cost reduction was the driving factor behind the increase in income from continuing operations, increasing from 3.6% right here, from 3%, it went up from 3.6% to 13% of total revenue. So if you see, because my cost went down, specifically the cost for my general and administrative, it went from 47 to 37%. that cost, your costs go down, your income from operations goes up. So I went from having income from operations representing 3.6 of my total revenue to 13% of my total revenue. Okay? So we can say it appears that aggressive cost cutting has helped the company significantly improve its income from continuing operations. So what you do here is basically you compare year over year. Okay? Did my revenues go up or down? Did my expenses go up or down? Okay? And then how did that impact your income from continuing operations? Okay? So it's just basically a simpler way. Okay? If you just look at the numbers, okay, I'm comparing 116 to 130, you really don't know the impact that particular line item has on total revenue until you do your vertical analysis. You know what? My admissions represents 23.7% of my total revenue. My event-related revenue represents 30.9% of my revenue. Okay? My NASCAR broadcasting represents 39.3%. Okay? And then my other 6.1%. How about your expenses? How are your expenses tied or impact your revenue? Well, if you can see here, the biggest chunk, 37.4% of your expenses that affect your revenue are your general and administrative expenses, which you cut significantly, impacting the bottom line. Okay? So you can say, well, that's a major change there. Okay? My direct expenses and my other direct expenses didn't quite change. Very close from year over year, 21 versus 24 versus 3.9. So that stayed significantly the same. Okay? My NASCAR person sanction fees increased a little bit, but not significantly. Okay? So, in the current year, your total expenses account for 87% of your total revenue, while last year it was 96.4%. Okay, causing your income from continuing operations to now in the current year be 13% versus last year 3.6%. We always want our income from continuing operations to increase. Okay, that's leftover money that we have after we cover our expenses. Okay. So that is what you do. You analyze and compare year over year, okay? Line item by line item. Okay? You're going to have something like this on your test. Make sure you know how to get these numbers. And like I said, all it is, you get your line item divided by your total revenue for each of the years. Okay? Okay. Now we're going to move on to exercise 14.5. This is also going to be on your test. This is a horizontal analysis of the income statement. Okay? So, it says, the income statement data for Winthrop Company for 2 recent years ended December the 31st are as follows. And then you have your income statement information provided. It says you're to prepare a comparative income statement with the horizontal analysis indicating the increase or decrease of the current year when compared with the previous year. Round percentages to 1 decimal place, and then what conclusions can be drawn from the horizontal analysis. So what we're doing here is, once again, we're analyzing our data. Now we're using horizontal analysis. Okay? Now, horizontal analysis is the analysis of increases and decreases in the amount and percentage of comparative financial statement items. Okay? Each item on the most recent statement is compared with the same item on one or more earlier statements in terms of the following. This is the amount of the increase or decrease and the percent of the increase or decrease. When comparing statements, the earlier statement is normally used as the base for the year for computing increases and decreases. Okay? And all of this, you might say, well, I'm never going to use it. I used to work for a bank, and I would always, every month, I was responsible for preparing financial statements. The system would generate the financial statements. I had to generate the vertical and horizontal and common size income statements for my boss. He wanted to see these numbers, so I had to download those financial statements and generate these reports for him. Okay, so it is used very commonly in industry. Okay, so once again, I've got my layout here. All I did is I copied and pasted the information into over here on the side so I can work with the numbers. Okay, so the information so far, I have not done anything with it. I just copied and pasted the data. Okay, now here we're gonna do a horizontal analysis. It's going across. Okay, so I have two things that they're asking for. They're asking you to indicate the increase or the decrease. If it's a decrease, it's gonna go in parentheses. Okay, and it's asking you to figure out the current year. Okay, the increase or decrease for the current year were compared to the previous year. Okay, so then they're asking you to also figure out that increase or decrease as a percentage. Okay, so this is the amount, this is the percentage. Okay, so how are we going to do that? Okay, for my increase or my decrease, what am I going to do is I'm going to get my current year and I'm going to subtract my previous year. Okay, so that tells me that my sales increased by $280,000. That makes sense. You had $2 million last year. Now you have $2,280,000, so that represents an increase. So you're going to do the same thing for each line item. Okay, you're going to compare last year. You're going to compare to the current year against the last year. Okay, and you're going to get the difference. Okay, so all I'm doing is I'm subtracting current from previous year. That's all you're doing. Current minus previous year. Okay, piece of cake. You want to get all those numbers before we move forward. Okay, and I could have done a formula in Excel, but I'm just showing you slowly how each of these numbers are being obtained. You subtract the current minus the previous. Okay, so we've got all of our increases or decreases, and if you notice, all of these amounts are positive, so that means that all of them increase. Okay, so my sales increase, my cost of goods sold increase, my gross profit increase, my selling expenses increase, my admin expenses increase, everything increased. They're all positives. Okay, now we need to figure out my percentage. Okay, now for your percentage, what you're going to do is you're going to get, okay, this is what you're going to do. You're going to get your increase amount or decrease amount, whatever it is, the amount that you just calculated, okay? And then you're going to divide by your prior year amount of each of the line items, of each of the categories. So the first thing I want to do is I want to calculate my percentage, my percent increase in sales. So I'm going to get my increase divided by my prior year, okay? And that's going to give me a 14% figure. So what does that mean? That means that my sales increased from the prior year to the current year by 14%. Okay, let's do this again. How about cost of goods sold? Well, my cost of goods sold, I'm going to have my increase of 210, and I'm going to divide by my previous year figure provided, which is $1,750,000. That's going to give me 12%. So your cost of goods sold increased by 12%. Okay? Gross profit is your increase of $70,000 divided by your previous year of $250,000, and that gives you 28%. Okay? So, since these formulas are changing horizontally, all you have to do if you are using Excel, once you've done a couple and you feel comfortable, let me do one more. You're going to do your amount, your difference, divided by your previous year. Okay? If you're using Excel, if you want to just don't want to do that manually, just go to the end and get this little box. It turns into like a little X or a plus sign, and bring it down. And it calculates all of your percentages for you, okay, automatically. You see? So it'll do the calculations for you once you've entered the amount. Now, in this case, I am not anchoring like I did before because the calculations are changing in every line, okay? Every line I am changing each of my calculations. You only anchor if, let's say, if in all of your calculations you had to divide by 15,000, then you would anchor the 15,000. But in this case, we're not doing that. We are dividing each of the line items separately, so you can just scroll them down, okay? So once again, let me show you. Let me delete. If you've already entered a formula, which is your increase or decrease divided by your previous amount, the formula is there. Just go to the corner, there's a little box, bring that down, and it'll automatically do the calculations for you, okay? So, the calculations, let me make a note down here, okay? So, the increase or decrease amount is equal to current year amount minus the previous year amount. That's the formula that we are using for my increase or decrease amount right here. This one is obtained by getting the current year amount minus the previous year amount. Now, if you want to get the increase or decrease percent, then that is equal to the increase or decrease amount divided by the previous year amount. So these are the formulas that we're using. So my percentage is the increase or decrease amount, this one right here, divided by my prior year amount, which is right there. Okay? Those are the formulas that we use to calculate this percentage. Okay? So that is the analysis. Okay? That is the easy part. The more complicated part is to do the analysis. You have to go through line item and figure out what's going on here. Okay? So I'm looking here and I can see that your net income has increased by 66% over the 2 years. Okay, we went from 15,000 to 24,900. That's an increase of $9,900, and it represents 66% increase. Okay, so I can start off with that. That's significant. Okay, so we can say that the net income from Winthrop, okay, company increased by $9,900, representing an increase of 66% over the 2 years. Okay. This increase was the combined result in sales. This increase was the combined result of an increase in sales of 14%. So we see here sales increased by $280,000. That makes it 14%. Okay, and we had a lower percentage increase in cost of goods sold. Okay. So we see here a cost of goods sold So we made more than what we spent. Okay, so our sales increased by 14%. Our cost of goods sold only increased by 12%, giving you a 2% margin right there. Okay. So, as a result, the percentage increase in gross profit exceeded the percentage increase in sales. Okay? So, If we look at our gross profit increased by 28% from 250 to 320. Why did it increase? Well, my revenue or my sales increased by 14%, while my cost of goods sold only increased by 12%, allowing me to generate an increased gross profit of 28%. Okay? So, of course, with greater sales come greater expenses. If we see here, we can see here our gross profit, our selling expenses increased because, of course, we had greater sales. Our admin expenses increased. My total operating expenses increased by 23.8%. Your income before income tax increased by 16,500. Okay, and your income tax expense, of course, increases because that's tied to your income from income tax before income tax. But at the end of the day, my net income increased by 66%, being driven by higher sales and a lower amount of cost of goods sold. Okay, so you can just explain this in your own words, whatever you interpret from this report. I decided to say the net income from Withrop Company increased by $9,900, representing an increase of 66% over the 2 years. This increase was the combined result of an increase in sales, right here, of 14%, and a lower percentage increase in cost of goods sold. As a result, the percentage increase in gross profit, okay, exceeded the percentage increase in sales of 28%. Okay, so my gross profit went from 250 to 320, increase of 70%. That it represents 28% increase in gross profit. Okay, so that is what you do in a horizontal analysis. You analyze the information horizontally. Okay, you figure out the differences in dollar amount. Once you have that calculated, then you can identify or calculate your percent increase in each of the items. Okay, this problem, something similar to this, will also be on your test. Okay, now those are two of the major analysis that are done: vertical analysis and horizontal analysis. That's why I decided to include them on your final exam. Then you're also going to see a variety of different ratio analysis in your homework. Okay, different calculations being done, different formulas being utilized. All of the information is provided in your book. Now, I decided to cover exercise 14.6, which deals with current position analysis. Okay, this problem is going to be on your test, on your final exam. So this one says, the following data were taken from the balance sheet of Nilo Company at the end of 2 recent fiscal years. Okay, so you've got your information for the current year and the previous year. A, determine for each year, number 1, the working capital, number 2, the current ratio, and number 3, the quick ratio. Round ratios to 1 decimal place. Okay, and then what conclusions can be drawn from these data as to the company's ability to meet its currently maturing debts? Okay, so let's start off with number 1. They're wanting us to do the working capital. Okay, let's take one at a time. Okay, so I went to the book and I found a section that talked about the current position analysis, and then I proceeded to looking at the section for working capital. Okay, so let's look here. Current position analysis evaluates a company's ability to pay its current liabilities. Okay, current liabilities are any liabilities that are due within a year. Okay, this information helps short-term creditors determine how quickly they will be repaid. This analysis includes the working capital, the current ratio, and the quick ratio, and we're going to do all those 3 today. Okay, so the first one that we're doing is the working capital. A company's working capital is computed as follows. Your working capital equals your current assets minus your current liabilities. Okay, so I've got the formula here. Current assets minus current liabilities give you your working capital. So we're going to use the information provided here in the table. Okay, current assets. Okay, what are my current assets? Well, Your current assets, if we look here, total current assets are $2,070,000 for the current year, $1,600,000 for the prior year. Okay? We are going to subtract our current liabilities. My current liabilities are $900,000 for my current year and $800,000 for my previous year. Okay, so let's do the current year first. Okay, current assets are $2,070,000 divided by my current liabilities of $900,000. Sorry, and it's minus. Minus liabilities of $900,000. Okay. So let's see what we get. 2,070,000, 1, 2, 3, minus 900,000. That gives me $1,170,000. Yes. So my working capital is $1,170,000. Okay. For the current year. Now for my prior year, my current assets are $1,600,000 minus my current liabilities of $800,000. And I'm getting these numbers from over here. Okay, I am getting my current liabilities. And then we're doing current liabilities down here. Okay? That is what we're using, those numbers right there. So for my prior year, I'm going to do $1,600,000 minus $800,000. That gives me $800,000 in working capital year number 2. So that is the first requirement. Your working capital is $1,170,000 for the current year versus $800,000 for the previous year. Okay. Now, current they're asking you to calculate the current ratio. Okay. Let's go look at the current ratio. The current ratio, sometimes called the working capital ratio, is computed as follows, and that is your current assets over your current liabilities. Okay. So let me put a note here. Your current assets include cash, marketable securities, and accounts receivable. Okay. That is what your current assets represent. Okay. So we're going to calculate for the current year my current assets. Okay. So okay. I'm sorry, that is for another calculation. Your current assets, well, it does say, no, we're going to use, for my current assets, we're going to use all of them that are provided. Total, they've already given you the amount here. Total current assets, okay? So once again, the total current assets, what happened here? Okay. Your total current assets are provided of $2,070,000, okay? So $2,070,000, 1, 2, 3. And then I'm dividing by my current liabilities, and they moved. This is my current liabilities. So it's basically the same formula as above, but now I'm dividing to get my current ratio, okay? So you're going to divide your current assets divided by your current liabilities, okay? Here we had current assets minus current liabilities. Now we have current assets divided by current liabilities. I was getting confused with my formula. Sorry about that. So I'm going to get the same figures, but now I'm going to divide, okay? So that would be the first one, and the second formula would be 1,600,000 divided by 800,000. Okay, so let's see what that gives us. Okay, that's your calculations in the calculator. So it's 2,070,000 divided by 900,000. That gives me 2.3%. Okay, 2.3. And then for my previous year, it's 1,600,000 divided by 800,000. That gives me 2. Okay, 2.0. Now remember, let me see. Remember the instructions. It says round ratios to 1 decimal place. So make sure. A lot of students get this incorrect because they enter too many decimals or too little. If it's telling you to round your decimals to 1 place, you need to make sure you do that. Okay. So that is your current ratio right there. Okay. Now we have our quick ratio. Okay. And this is where the formula that I was putting on before takes place. Okay. So here, the formula for your quick ratio is your quick assets over current liabilities. Okay. So let's look at our quick ratio information provided in the book. It says one limitation of working capital in the current ratio is that they do not consider the types of current assets a company has and how easily they can be turned into cash. Because of this, two companies may have the same working capital and current ratios, but differ significantly in their ability to pay the current liabilities. A ratio that captures this difference and measures the instant debt-paying ability of a company is the quick ratio. Okay? This is also called the asset test ratio. And this is the formula: quick assets over current liabilities. Okay? Quick assets are cash and other current assets that can be easily converted to cash. This is where I was getting confused earlier. It's your quick assets that have an adjustment that needs to be made. Okay? So quick assets normally include cash, temporary investments, and receivables, but excludes inventories and prepaid assets. Okay? So for quick assets, you need to do your own calculation. And that is where my confusion came about. That goes under quick ratio. Okay? So we need to figure out our quick assets. Okay? So remember, our quick assets include cash. Okay? It includes cash. It includes temporary investments. Okay? And receivables. Okay? It excludes inventories and prepaid assets. Okay? So let's make a note here. Okay? Quick assets includes cash, temporary investments, and receivables. Okay? So let's look at our information provided so we can calculate my quick assets. Okay, so your quick assets are going to be cash, which is 414,000, plus in temporary investments. These are your marketable securities of 496,800, plus receivables. I have receivables of 619,200. Okay, that is all that it includes. You're going to add those amounts together, and then you are going to divide by your current liabilities, and your current liabilities are 900,000. Okay. So that is going to be the first calculation for the current year. Now for the previous year, we're going to get cash of 320,000. Plus marketable securities of 336,000, plus accounts receivable of 464, and then we are going to divide by your current liabilities, and your current liabilities in the previous year is 800,000. Okay. So that is the calculations that we're doing. Now let's get our calculator. 414 plus 496,800 plus 619,200 gives me 1,530,000, and I'm going to divide that by 900,000. That gave me 1.7%. Okay. I'm going to do the calculation for the previous year. It's 320,000 plus 336,000 plus 464,000. That gives me 1,120,000 divided by 800,000, and that gives me a ratio of 1.4%. There we go. So these are the solutions that we're looking at. They're wanting us to calculate my working capital, my current ratio, and my quick ratio. Okay. Now that was requirement A. Okay. Now requirement B is asking you what conclusions can be drawn from the data as to the company's ability to meet its currently maturing debts. Okay? So, let's compare the working capital. The current year is 1,170,000. The previous year is 800,000. So, that represents, and I'm just going to do a little formula here, how much did it increase by? My working capital increased by $370,000. Okay? Your current ratio increased by 0.3%. Okay? Your quick ratio increased by 0.3%. Okay? So, what can we say here? We can say the liquidity, how do I spell this? Liquidity, there we go, of NILO has improved from the preceding year to the current year. The working capital current ratio, and quick ratio have all increased, which is a positive thing. Okay? Most of these changes are as a result of an increase in current assets relative to current liabilities. Okay? So my current assets increase, driving up all of these ratios. Okay? So let me just make some corrections here. Okay, so I put here the liquidity of NILO has improved from the preceding year. If we notice, all of these are increases from last year to this year. I've reported increases in all three of my measures for my current position analysis. My working capital went up by 370, my current ratio went up by 0.3, and my quick ratio went up by 0.3. Okay, so that represents improvement. That means that I'm in a better position to pay off my current liabilities. Okay, and why did this happen? Well, if we look at the data over here, overall my current assets went from 1.6 million to 2,070,000. Pretty significant increase in my current assets in comparison to my liabilities. My liabilities did not increase at the same rate as my current assets, producing a positive effect on my current position analysis. Okay, so this will also be on your test. Okay, so now I've gone over the three problems that you are going to have on your final exam dealing with chapter 14. Okay, like I said before, I will be posting the final exam review during week number 16, so you can begin preparing. If you have any questions, please don't hesitate to contact me during week 16. I will not be answering any content-related questions once the final exam becomes available. Okay? If you have any questions about anything, do not hesitate to reach out to me. I am here to help you out. Please ensure that you write down all of your assignment deadlines to complete all of your assignments timely. That way we can earn as much points possible, so we can do great and end the semester strong and pass this class, and we can enjoy our summer. Okay? I'm here to help if anything arises. Do not hesitate to reach out to me. Until next time, stay safe. See you later, guys.